So you know the world is tired of Biden when even the IMF is scolding the US for the second time. In April, the IMF warned Biden for his endless spending, how Congress is spending irresponsibly to prop up the economy. America's fiscal policy is crushing the world. When they borrow money for deficit spending, this is taking money away from the world. It contributes to global instability and multiple currency crises. When the US does anything, it affects everyone. It can be raising interest rates, printing money, or freezing assets. The global economy is affected. And the latest stunt they pulled is perhaps the most dangerous. A few days back, President Biden decided to hit China with a massive set of trade tariffs. And as everyone knows, this is very counterproductive. It won't hurt Beijing or collapse the Chinese economy. What it will do instead is impoverish American citizens. It will cause higher prices in the country and hurt family budgets. And once again, the IMF is scolding Biden over this. The China tariffs are posing tremendous risks to both the US and the world economy. We are moving towards global fragmentation where everything starts splitting apart. Trade is being segregated into different blocks, the Western club like the G7 versus the rest of the world, including BRICS. And this trade tariff shows the US weaponizing their consumer market to contain its economic rival, China. The problem with this is the risk to global supply chains. Every time the US throws a tariff or forces a Chinese factory to close somewhere in the world, it extends the supply chains even further. What's dangerous is how China has vowed retaliation against the US. They are going to hit back with their own trade barriers and even sanctions. If China decides to impose their own import taxes, many American jobs will be affected. Biden's tariffs won't just cause higher inflation, they put jobs on US soil at risk. Just in the swing states alone, exports to China are supporting a ton of jobs: 12,000 jobs in Georgia, 8,000 in Pennsylvania, and almost 18,000 in North Carolina. And these are second order effects that Biden isn't considering. China accounts for 8% of total US exports. The US is selling stuff into China for Chinese money, and this is business Beijing can very easily block. Now, will this hurt China? Yes, it will, but the effects on the US economy might be worse, especially when inflation is still a big crisis in the country. Let's not forget that. The IMF recognizes this, and that's why they are warning President Biden that his trade war against China is a very bad idea. According to them, the US would be better served by maintaining their open trade system rather than imposing new punitive duties on Chinese goods. It's important we understand why. Free trade is always better for the US because manufacturing is hollowed out in the country. America needs cheap Chinese goods to bring inflationary pressures down. US inflation is at a tipping point today, and if we break things down, we get a very clear picture. Goods inflation is actually dropping. Why? Because cheap products from China are circulating around the US economy. Just go to Walmart, half of the stuff there, maybe even 90%, is made in China. However, food, energy, and services are still rising in price, and that's why inflation is still sticky even today. When you start a trade war, you reduce the supply of cheap goods, and this causes a very big problem. Now the US will have to scramble around the world to replace the missing goods. Instead of buying from China directly, they will have to go through middlemen, and these people will repackage Chinese goods with a foreign label and then sell them back to the US. The end result is even worse: higher inflation for the US consumer. It's the same end game as the Russian oil sanctions. The oil gets bought by India and gets re exported to Europe at a higher price. It is the exact same thing. Economists all agree that the trade war is horrendous for the US economy. It reduces the valuable quantities of goods and services for both corporate and domestic consumption. And this leads to lower income, reduced employment, and lower economic output. In other words, GDP will decrease. The second effect is just as bad. It hurts local production as well. The cost of parts and materials will rise, and this makes the price tag more expensive and causes US goods to become less competitive. And what is the end result? A further hollowing out of the US manufacturing base of their industrial capacity. When the US imports stuff, it's not just for direct consumption, a lot of it are raw materials or the industrial inputs. Germany's manufacturing is hurting because of expensive energy. The US, on the other hand, will suffer from higher raw materials, but the result is more or less the same. Products become more expensive and uncompetitive. And here's how significant this is: 45% of total US imports are intermediate goods, and these are imports needed for the final production of American goods. For example, China exports a lot of electronics and machine parts to the US, and these are inputs US companies use to make everything from computers all the way to farming tractors. And if the cost of these inputs goes up, so does the cost of the final product being made. It's a very simple cause and effect. You don't need a degree from Harvard or Princeton to understand this. But just observe the tariffs Biden has imposed on China. Let's illustrate how this will backfire in real time. And if you're American, this should horrify you about the future of US manufacturing. Biden's tariffs are going to set back the US EV industry. Look at America's dependence on Chinese raw materials for renewable manufacturing. 70% of US graphite imports comes from China. 70% of lithium ion batteries are Chinese, and 77% of permanent magnets comes fresh off the boat from Beijing. And if you raise import taxes on this, US companies will have to absorb them. There are simply no other alternatives around, and this will raise the cost of production and make US EVs even more expensive. Biden can't magically conjure a new supply chain. He can't create a magic factory filled with Oompa Loompas to create these raw materials either. They will have to come from China. Once again, remember that tariffs are import taxes paid by the US consumer. In this case, US companies will be stuck paying higher import taxes. The problem with this trade war is how things can really escalate, and this is what the IMF is afraid of: global fragmentation that will destroy global trade. In other words, a second Cold War that will take down economic growth. Now, pay attention to this chart. It shows the bifurcation is already happening. We are seeing bloc politics in play here. On the left, we have trade growth after the Ukraine conflict started. Overall trade is declining, which isn't a surprise. We are moving towards a global recession. But the biggest decline came between blocs. In this case, the G7 aligned bloc and the Chinese Russian bloc. Trade collapsed by nearly 5%. The G7 are trading more with each other. China and Russia are doing the same. This is economic fragmentation. On the right, we have foreign direct investment flows as well. Money is flowing to all the non-aligned countries. Countries like India and Singapore, they are benefiting from this 5% growth. In other words, China isn't investing in the US. The G7 is reducing their exposure to China as well. Once again, this fragmentation is getting worse and worse. Between the Eastern and the Western blocs, investments have dropped by 3%, especially in the US. Building anything there is a big risk, especially for China. You have the threat of confiscations and divestments. Your investment simply isn't safe anymore, especially if you're Chinese. And if this trend continues, we'll be back in an era of a second Cold War, at least when it comes to the global economy. Today's war is truly economic. The weapons aren't missiles, they are interest rates, reserve currencies, manufacturing capabilities, and trade sanctions. And these are your weapons of mass destruction. The IMF believes we are already in one. Trade fragmentation today isn't that different versus the initial years of the Cold War, the period of competition between the US and the Soviet Union. The left chart shows us that trade is already fragmenting. Between the Western and the Eastern blocs, trade has dropped more than 0.2%, worse than in 1947, the first year of the Cold War. And that's the line in red. Even though prices are higher elsewhere, the US doesn't care anymore. It's all about protectionism and doing whatever it takes to bring down the competition. And if it hurts your domestic economy, so be it. China is the big boogeyman today. So we can kind of expect the trade war to continue and even get worse. But I want to talk about the other side. China's moving fast against the West as well. They are doing their own version of fragmentation. They are pushing back against the US dollar system. In a recent report, China has dumped their holdings of US debt at a record pace. In place of treasury bonds, they are hoarding even more gold instead. And this is obviously a move to break apart global trade as well. China is moving towards bilateral currency trade, and this means a lesser need for Beijing to accumulate dollars and, by extension, US debt. China is encouraging the world to trade outside of the reserve currency. In his recent trip, Putin told the world that China-Russia trade, 90% of it, is settled in yuan and rubles. He's not just saying this for fun. It's a signal to the world that life can continue outside of the dollar system. And this is one financial fragmentation the Chinese and the Russians are going to pursue. It's not going to stop. Russia will continue selling oil and gas in other currencies outside of the dollar. China will do the same. They will encourage trade using the yuan, and you can bet they will do whatever it takes. And it could be even giving currency swap lines to provide countries like Argentina with enough cash. So for the US, this should be extremely disturbing. As the dollar becomes less popular in global trade, the demand for US debt will drop as well. And this puts pressure on borrowing costs in the US, and things aren't looking good for the treasury market already. Countries are beginning to divest away. Governments around the world, they are reducing their exposure to US bonds. Take a look at this. Just before the '08 crisis, countries had maximum trust in US debt. They held over 55% of total debt issuance, and that percentage is almost under 30% today. And with Russia and China working together, this will continue to trend down. Obviously, this isn't great for the US. In the short term, this is painful for the world economy as well. Now, when the reserve currency breaks down, a lot of nasty things can happen. There could be multiple short-term currency crises. Inflation will get more volatile. Prices in the West could stay elevated for a very long time to come. The whole world will be in pain, and that's why the IMF is freaking out. And when there's instability in the global economy, a lot of nasty things can happen. Just recall the Arab Spring in 2010 and most recently the farmers' protests this year in Europe. All of this are results of fragmentation. But let's end this with China's retaliation. This is not a matter of if but a matter of when. Chinese officials have explicitly said they will take some form of action down the road. China will take all measures necessary to defend our legitimate rights and interests straight from their foreign ministry. And as we've said, China has many tools they can choose from. They also have the benefit of time. And if the US decides to tariff every single Chinese import, then all hell will break loose. America's economy is built on cheap raw materials from Beijing. We have electronics, machinery, chemicals, metals, and plastics. The total value of these imports was more than $350 billion, and that's a frightening amount of dependency on China. A lot of industrial inputs are coming from Beijing. If we get into a zero-sum game of complete protectionism, the global economy is toast. It will break down. China could also retaliate here as well. Either way, it's higher inflation for the world, especially the US consumer. Now, I wish I had a better message for you, but there's probably no escaping this. Even if the wars in Ukraine or the Middle East ends tomorrow, this mess won't stop. Attention will turn to the Indo-Pacific and China. The Eye of Sauron will look east, the armies of Mordor will mobilize. The US will focus on a new enemy. And this is just the beginning. But let me know what you think. Will Biden reverse his trade tariffs? And how will China retaliate? Let me know in the comments below. Take care and I'll see you soon.